violent rioting in the streets of Bangladesh right outside the country's stock exchange. Investors apparently panicking early today after stocks plunged 9% in 1 hour. That's the biggest fall in the exchange's 55-year history. The crash of this frontier market is causing fear in emerging markets, small and large, that maybe the bubble could burst. So let's talk. Joining us now, Ron Wiener, President and CEO at RDM Financial Group, and Tom Lydon, editor of ETFTrends. Ron, start with you. Emerging markets were down 1% today. They're starting the year off bumpy. They're down 2%. They have been the darlings. The Bangladesh story, is it apocryphal? Are bubbles going to be bursting throughout the emerging markets?
No, not even close. Well, first off, 10 years ago, there was no stock market in Bangladesh. There's been huge growth all over the globe. This is a decades-long story, Larry. This isn't a week or a month or even a year. There's going to be 350 million new middle class in emerging markets and just through till 2030. These people are going to be buying cars and iPads and toothpaste. Now, this is a long-term play. You got to expect in these frontier markets, you're going to have that kind of thing. But just think, there was no market 10 years ago. Well, it's all growing.
Yeah,
it's all growing. It's fine.
I mean, the world doesn't revolve around Bangladesh, but God bless them that they have a capitalist stock market. But Tom Lydon, let me go to you on this point, because regarding the love affair with emerging markets, in the long run, I have no doubt. But in the shorter term, let me ask you, what are the risks? Inflation is rising in many of the countries. You look at China, you look at India, you look at Taiwan, you look at Brazil. Interest rates seem to be rising in many of these markets. What is the near-term risk? I'm looking for things that might derail a very rosy U.S. stock market outlook at the beginning of the year. What's your take?
Yeah, I agree with Ron. I mean, what's happening today in Bangladesh is not really to be concerned about. Yeah, Indonesia markets went down 5%. But if you look back in the last 10 years, when situations like this happen out of panic, they really were great buying opportunities, Larry. So I think going forward, there's not a lot to be concerned about. Boy, we're in the heat, or just about to be in the heat of earnings season. And as you know, I'm a big fan. So I think we're going to continue to see strength here domestically, and that's going to forgive any sins that we see going on in the emerging markets.
But Ron, I just want to play the contrarian on this emerging market story, because they've had gigantic outsized yearly gains in 2009 and 2010. Now, you could make the same case for the American stock market. I get that. But looking down the list, China, Brazil, India, the rates are going up. Taiwan, interest rates are going up. I didn't know about Chile, but I'm saying it's a different situation. And the tone here at the beginning of the year doesn't look so good. And I understand that Bangladesh is not the world, but Bangladesh is not nothing. It's out there in that Asian region where rates are rising. Does this not concern you at all?
Sure, it concerns me. And we're not talking about the emerging markets being 40% of somebody's portfolio. What we're talking about is probably it makes sense to have 15% in a variety of emerging markets. There's actually small, mid, and large cap, if I can make an analogy to the United States, where the BRICS are the mega caps or the Dow, and then there's all the middle ones, the Chiles and all those. Then there's a small piece, 1-2%, maybe to the emerging markets if you got the nerve. But over time, Larry, this is not going to happen short term, but over time, all the growth here has got to spill into consumer spending, oil production. It's going to be the decade story, maybe 2 decades, maybe 3.
You like the consumer story in these emerging markets. You've got, you know, consumer department stores. You've got consumer-related car sales. Is that the best place to be? Nobody really focuses down on emerging sectors. I'm going to give you a shot, and Tom, I'm coming to you with some more. Go ahead, Ron. What's your take? Consumers, is that your #1 priority for the emergings?
Well, you know, it's hard to say. Infrastructure is going to be huge and all that, but we have one position. It's only a 3% position in the portfolio, but it's the Dow Jones Titans of consumer spending, consumer services. It's things like Unilever of India, Ambev, Mexico's Walmart. I mean, these are things that are on the ground. They're growing. If you missed Walmart 20, 25 years ago, you actually get another chance to buy it again. In Unilever, how many Indians are going to use toothpaste for the first time in their lives? And it's this huge number of people. It's frightening to think how many consumers there are going to be.
All right,
so yeah, that's one place.
All
that's
right,
just
the
one.
spread of free market capitalism around the world, the growing middle class has tremendous income and wealth creation. Tom, let me ask you about banks. That's another one. Let me ask you about construction companies. That's another one. And let me ask you about mining companies. Do those areas make sense for emerging markets?
Absolutely. I mean, banks with this high GDP that we're seeing, especially in areas like India and Brazil, they're making money hand over fist. And as far as miners, Larry, I consider going with miners rather than buying the asset-backed commodities themselves. Again, if it takes $600 to pull an ounce of gold out of the ground, but you can sell it for $1,300, $1,350, pretty profitable, and I think the miners are going to be in the top of the list as we get into earnings season.
All right, and Ron, last one to you. What about this currency issue where Brazil and some of the other countries are putting currency controls? They don't want the overproduction of U.S. dollars to come in and continue to inflate their economies. But that can affect stock market investors, too, who are going to have a flow of capital. Is that an issue?
You know what? It may be a short-term issue. You know, they're getting to be more and more like us every day. We all have to play ball. One of the interesting statistics is last year, Brazil did more trading with China than they did with the United States. It's the first time one emerging market did more trading with another emerging market, and we weren't part of it. One more statistic before I forget. You know that there's 1 billion people in the emerging markets that have access to cell phones but don't have access to banking. So not to change the subject, the bank, there's an awful lot of opportunity in the banking sector because people don't have it, and they're gonna have them soon, too.
All right, you're
No doubt.
very optimistic, Ron Wiener. Thank you, Tom Lydon. We appreciate it very much. Emerging markets, not to worry. I don't know. Maybe you should worry a little bit. Coming up.